All right, traders, this is video number 4, or section number 4, that is, under cryptocurrency trading for beginners, the 9 steps to becoming a rockstar crypto trader. This is number 4. This is called Know the Trend. All right, so we're back to Bitcoin against the US dollar. So let's talk about what the trend is. And the trend is simply what direction is the market going. So let's start right here, where Bitcoin hit this support level and started going up. What direction is the trend? It's going up, right? What happens right here? The trend goes back down. It goes back up. So one thing you need to understand, and listen to this carefully, the trend is your friend. We'll talk a little bit more about counter trend trading and things like that. But you need to understand that most of your winning trade setups are going to come from trading with the trend. So if you understand, like an example, if you were all the way back here in July 12th of 2018, and the market started going up and up and up, by the 16th, you realize that the market is starting to move. So we don't want to be taking selling positions when we know the market is going up. You're going to have a much higher chance of taking a winning trade if you're trading with the trend. And at this point, the trend is going up. So what would we be doing? We'd be looking for buy opportunities. We'll talk about that a little bit more. But in this example, the market went up. It broke. You already saw this existing resistance line become support. I would be taking a trade opportunity right here when the market hit, and look, it went all the way from 72.50 all the way as high as 84.77. You would have crushed it in the marketplace had you taken that trade. Okay, so now what happens when the market starts going back down? Well, now we're looking for selling opportunities to trade in the market. Does that make sense? So it's very easy. Is it going up? Is it going down? Or is it going sideways? Find a sideways market. Right here, you see this whole period of time from, let's say, this is like a 1 month period between September and October of 2018, where the market just went kind of sideways for a little while. Not much happening. Then eventually, same thing. Market was sideways for a long time. We had a huge spike, came back down and settled back into it sideways. What's called a consolidation. Just the market's chilling, not much activity, no trades. And all of a sudden, boom, it explodes, right? All the way down to where it's doing right now. So trade with the trend. When you know the market's going down, down, down like a rock, do not be looking to buy Bitcoin until you start seeing a confirmation. And we'll talk about that in some of the videos on when the market's actually back into buying mode again. Okay. And right now you can see how it's in sell mode on Bitcoin. That doesn't mean at the time of this video that it is. I'm saying is based on these charts. We're only looking for sell opportunities. Right now, I would be looking to sell Bitcoin if it came all the way up to the 4,400 mark based on this, because it rejected, worked its way down. If it hits here and bounces back up, and we can show in the shorter time frames that it's still working its way down, then we would look to sell for it to drop down even further. So I hope that helps. Let's go to the next video. All right, section 5 of cryptocurrency trading for beginners, the 9 steps to becoming a rockstar crypto trader. We want to talk about trading with the trend versus against the trend, which is called counter trend trading. By the way, this is all brought to you by Crypto Pro Elite. Go check us out. We've got free webinars. We're teaching a lot of really in-depth trainings on how to trade crypto. It's really, really cool stuff. Go check us out. But in this process, let's go back to my charts here, and let's talk about the dangers of not doing this the right way. Okay, you want to make sure, and I just accidentally deleted that line here. Okay, let's put that back on here. So, okay, that's horizontal line, right about right there. Okay, so when the market is trending, and you start seeing, let's go back here again, where we have this nice movement in the markets. When you know that the market is already working its way up, there are always opportunities. Like the market's working up. I would say we're still in buy mode right here, right? In fact, let me zoom this in here. I'll show you what I'm talking about. Still in buy mode. However, are there opportunities to sell? Yeah, you could have sold right there. Gained a little profit here. You could have sold there, made a little profit, but you wouldn't know that until after the trade was already set up. So at that point, if you're taking a sell position, like these little opportunities, right? When the market is going up, and you have a strong uptrend, you're taking a very, very, very high chance of actually taking losses. Okay, now obviously losses are part of trading. We understand that. However, you don't want to go out of your way to put yourself in harm's way of taking losses when you can just be smart, stop and wait for the buy position. So we talked about this in the last video, but I want to reiterate in this video that when you want to be taking trend-based, you want to be trading with the trend. So if we are going up, especially in these cryptocurrencies, they move very hard, very fast. If you are in an uptrend, only be looking for buy positions. Okay. If it's in a downtrend, only be looking for selling opportunities. Do not look to buy. Okay. So I can't stress that enough. Let's go on to the next video. This one was really short. Next video. Alrighty, everybody. Section number 6 in the cryptocurrency trading for beginners series. 9 steps to becoming a rockstar crypto trader. I want to talk you through talking about finding the perfect step. So let's walk through our slides a little bit real quick. And I know you can see this thing full screen because I have to get the charts just a little bit. So number 1, we talked about the trader's mindset. So you want to make sure at this point you have a strong trader's mindset. You're going to run and operate this like a business without allowing your emotions to take control, right? There's a perfect plan of attack you're going to have that you can use. 2, we're going to talk about, you talked about managing your money and these 6 steps, right? And you're following that. You understand support and resistance. You know the trend. You know that we're going to trade with the trend because the trend is our friend. And now we're about to have some fun, folks. We're going to talk about finding the perfect trade setup. So let's go to our charts. So in this situation here, what I would have been looking at is overall, you can see this particular support line was hit over and over again, right? In Bitcoin against USD. Is continually, every time price gets around it, has a very difficult time breaking through. It struggles around it. So a lot of times what will happen is when the market is trending, first of all, we're only going to be taking either, we'll talk about swing trading in a different video, but we can see here that the market started moving up, but this base support line slash potentially future resistance line, if it ever breaks through and stays through, right? That we're going to be, it has a lot of movement to happen around in this pair. So when price usually gets to around the 61.50 mark with Bitcoin against the dollar, we usually see a lot of bounces. Okay. So the market went up, 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 up. They went down, 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 and it hit the line and rejected. Now, because we were back at that resistance point, I would be looking for a potential buy opportunity to buy Bitcoin against USD around the support lines. What happened? I would have bought here, had a stop loss just a little bit down in here, probably about 100 pips, 150 pips. And then as the market went up, I would have gained almost 400. Yeah, almost 400 pips before I closed out that trade. And now I would have been looking for more opportunities. So let's show what the market did as it started unfolding. Again, the market went up, came back down, hit the key level again, which I would have been taking a buy position again. And we would have went up, closed out that trade in profit. And let's walk through it again. A huge spike. We didn't touch anything with that. Price breaks down again. Okay, so what we're looking for right now, let's talk about right now where the market's at, right, as I'm shooting this video. The market is in a downtrend, okay? So overall, the market was flat, 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 and it's been dropping like a rock for the last 3 weeks, okay? But now we're starting to see the market settle down a little bit. It broke down through that old support, hesitated around that support and resistance, had a real struggle, eventually broke, hit an old support level, went up, retested it again. This is a sign. When it hits a second support level and starts going up, it's a great sign that the market is going to be taking an opportunity. It's going to go up. So I would have taken a buy position here as soon as I saw the market going up and put a stop loss below these wicks here, right? And basically, as the trade starts going up, we'll talk about managing trade once you're in it. We would have started closing out part of our profits, moving your stop loss up, continue to go from there. And then price hit the old resistance level again for a great selling setup. Now we're sitting here looking at the market about to hit the support level again, or sitting real close. So now is we can start seeing the market volume is starting to slow down and everybody's starting to chill, which means the selling pressure is starting to wear off. Okay. So what I'm looking at here is seeing Bitcoin come down here, test this line again, looking for buy opportunities for the market to continue going back up. Let's go on to the next video. All right, step number 7 in the cryptocurrency trading for beginners series in 9 steps to becoming a rockstar crypto trader. We're going to talk about using stops. Now, what a stop loss is a protective order to exit a trade if it starts going against you. For example, let's back up here. Let's look for a trade we would have taken here. Yep, this is a support level. Price went up as it came down to retest and start working its way up. I would have taken a trade. So let me zoom in here and we'll talk about setting up a stop loss. What I would have done in this situation is taken a trade here, and I would have put what's called a stop loss. In fact, let's open up an order box. Let's say we wanted to buy Bitcoin at 62.36. You place a limit order, and then we set a stop loss around 60, 60. Okay? 60. Okay? Of course, the numbers aren't going to work because the market's currently below that, right? But here's what would have happened in that situation. Let's say that we bought here, but then instead of it going up like it did, very predictable, it broke down and just exploded downwards. Do we want to let this thing go forever? So we have to sit in that trade maybe a year before it goes back up, before we can close out and get our money back? That's not what we want to do. So we want to do what's called set a stop loss. And a stop loss is a secondary order that says if the price goes down to here, just dump the trade. And again, we talked about no more than 2% of your account balance, right? 1 to 2% of your account balance per trade. So again, let's say you have a $10,000 account. If that trade goes against you, what do you want that trade to do? You want it to close at a loss, but it's a small predictable loss. 2% is not a big deal. 1%, whatever it is that you want to manage, whatever you're comfortable with. Okay, so that's what a stop loss is. We want to make sure we protect our trades, and we'll get into here in another video. Once you're in a trade and it starts moving up in profit, what do you do from there?